Yo, it's Marcus Saber. So there are two things that I'm so excited about right now within finance that I want to shout from the mountaintops to let everyone know about. And one has to do with BlockFi, which does not have to do with this video, but if you're interested in BlockFi and want to know more about the risks and rewards about gaining 8.6% interest on essentially having crypto that's tracking the US dollar, so it is a stable coin. So I think this is really exciting, basically like a savings account to get 8.6% interest that I'm putting my personal savings into at the moment. Kind of like my emergency fund, I'm putting that into that right now. It's something that's a little bit more aggressive, but I see this as an opportunity. I know that there is some risk involved with this, so if you want, I can make a video about talking about the risk and the reward. And I do have a referral code that I could give you guys, but I don't want to give you guys the referral because basically you guys could use a partner code with somebody else and you'll get up to $250 within Bitcoin. And I want you guys to get the most out of your money as you can get. So my code would only give you like 10 or 20 bucks. So definitely don't use my code, use someone else's code that can give you that $250 in Bitcoin. And if my code ends up being the same as someone else's code, I'll promote that more. But at the moment, I'm not trying to promote my code at all. Now, let me know if you want a video about BlockFi, but going into covered calls, which is what this video is about, which is the second thing that I'm super excited about, that I want to shout from the mountaintops so that everyone at least is aware of this opportunity. Just like BlockFi, it's not for everyone. There is some risk involved, and it's not for everyone by any means. Like covered calls, it's not for everyone by any means, but it is an opportunity that one can make a lot of money and beat the market in some regards, at least outperform your individual stocks, outperform your ETFs that you have even. So what is this exactly? Basically, options and calls. So if I'm selling a call or buying a call, basically this is a contract. Each contract is 100 shares. So if I'm buying a call, I'm saying that this option contract, I can buy 100 shares in a future date, and there is a strike price involved. So for example, let's say that this stock was 10 bucks and I'm buying a contract that says in 1 year from now, I'm going to buy it for 15 bucks. That's my strike, at least. I have the option to buy it if it gets over 15 bucks. And let's say I pay $100 per one contract. So basically it has to go up not only to 15 bucks, it has to go up to 16 bucks or over 16 bucks because I paid $100 or $1 per share for that contract. So that's the math there. And I'm paying $100 and I could either buy the shares in the 1 year when the contract expires, or I can choose to sell the contract before that date. If the price of the stock goes up a lot before then, I could sell the contract then and there. I don't have to hold on to the contract till the end of the contract. And when I'm at the end of the contract, I would have to have the funds to be able to buy the shares for the contract. Now, on the other end, in terms of selling the contract, basically, so you're selling to someone else. You're playing kind of the house in a way. And when I talk about playing the house, I'm also more talking about you're selling these contracts that are way out in the money. Basically, the person that's buying the contract is buying a lottery ticket, kind of like selling Tesla like I did for $5 only. That was my premium that I got from the contract, but this was when Tesla was at under 700 and it was expiring, this contract was expiring in a day or two for a $955 strike. So basically, it would have to move from under 700 to over $955 for someone to profit on that. So basically, I sold somebody a lottery ticket. And that's the thing that I'm really excited about. Selling people lottery tickets, not buying these lottery tickets. So like, for example, on Friday afternoon, I could have sold a Tesla contract for over $1,200 strike prices and get a premium, a juicy premium between $20 to even $40. So a lot in premium comparatively in terms of, we're talking about a Tesla price that's under 600 at the moment for a strike price that expires on the Friday of next week on the 12th. We're talking about expiring on the 12th for over $1,200. We're talking about over doubling in share price. I don't think Tesla has ever doubled in price, at least in the recent history of Tesla, for within 1 week. And at a market price, or at a market cap where it is at right now, that would be absolutely ridiculous and insane. So I would be selling, and I plan to sell a similar contract come Monday or Tuesday if there's a spike in Tesla stock. I'm going to sell these lottery tickets to somebody who wants these lottery tickets. And I'm playing the lottery or the house who's just giving someone these lottery tickets. And basically, if the worst case scenario for me It would be, oh, Tesla stock actually went up to $1,300 or some ridiculously high price, and I have to sell all my shares, each share for $1,200 each. So that would be literally the worst case scenario. I would make a lot of money still, and in that scenario, I wouldn't be so sad because I sold 100 shares for $1,200. This is a ridiculous thing that could actually happen, but it is possible. Everything all scenarios are possible. They announce something that's groundbreaking and ground earth shattering. And because these are actually possible for certain companies to actually double up in 1 week. And this is kind of why maybe you don't want to sell certain call options for certain shares and for certain companies and for certain stocks, because some stocks could actually double in a week. And that would be the craziest thing ever. So you want to be able to capture those doublings in a week on some of those stocks. But maybe we're talking about whether you're selling shares or selling call options on SPY, or if you're selling call on Apple or Tesla or even Palantir. You're talking about these stocks that we don't think are going to necessarily double in 1 week, and maybe Palantir arguably could, but we're talking about even Palantir is a pretty large cap company as well, sitting at just under 50 billion in market cap. And Palantir has such a juicy premium. So this is another idea too. So I talked about what contracts are, what it is to be selling an option and buying an option, and why I'm so excited about selling options. I think it's almost so interesting, this premium, to look at stocks and you look at the fundamentals and you look at the technical analysis as well. But also you look at what can I get for the premiums every week. With Palantir, I could almost get 1% a week and be pretty conservative on my calls that I sell. 1% per week is ridiculous. That is a dividend on steroids, literally. So think about the premiums that you can get per company when you're thinking about buying a company possibly. I think it's legitimately a thing to be looking into. Look at the fundamentals of the company. Look at what you think, maybe they give you a dividend already. You look at all these different things. Look at the technical analysis as well. But then also, what can you get for the contracts if you want to sell covered calls for this asset? I think it's literally a valid thing to look at. I think that's pretty funny in some way, but it's definitely a part of the equation for me now when I'm looking at stocks. Well, I'm going to end this right here. I hope you guys got some value from this content. And if you haven't already, smash that like button, subscribe to the channel for more content like this, and I'll catch you guys in the next one. And keep in mind that none of this is financial advice. This is just some random guy on YouTube drawing some stick figure lines on a chart talking to you guys.